For this video, I want to go through a sample form IT-203, which is a New York non-resident and part-year resident tax return. For this example, what we're going to have is our taxpayer here, Emily, taxpayer, starts off the year as a New York resident and she moves to Florida midway through the year, so she needs to do a part-year resident tax return. So I've got the IT-203 here, which we'll go through. We've also got Emily's Form 1040, so we'll cover this as well to see how the numbers flow over into the New York return. We've also got the IT-203 instructions here. So the instructions are certainly helpful for learning how to complete the form, but we also need it in order to reference the New York State tax tables to figure out how much tax we're going to owe on our New York income. And then lastly, I've got just two slides here with some information on the fact pattern that we're going to be working with, and then some other notes on New York specific tax issues that might impact a non-resident or part-year resident. So we'll start with the slides first and then move into the return. So the fact pattern we've got here, we've got Emily, taxpayer. She's a single filing taxpayer and resident of Florida as of the end of the year. Now, she started the 2022 calendar year living and working in Albany, New York, and then later moved to Florida after accepting a new job. So during the 3 months Emily was a resident of New York, she was working for Company A and was paid $30,000. Now, Company A, at the end of the year, sent her that W-2 showing the $30,000 in federal and New York State wages, and it had $2,000 of New York State income taxes withheld. Then, when Emily moved to Florida, started working for Company B. She was paid $117,000 for the 9 months remaining in 2022, and her W-2 from Company B showed $117,000 in wages, and all of those wages were Florida source. So there wasn't any New York source reporting or any kind of New York income taxes withheld because this was a Florida-based company. Everything was done in Florida. Now, as far as investment income, Emily has a U.S. bank account that paid some interest income, $305 for the year, and she had a stock brokerage account that paid out some dividend income, $950, and she did sell some stocks towards the latter half of the year, and the stocks resulted in long-term capital gains. Now, we've put together this schedule here, and the purpose of this is try to show when the income amounts were earned and paid out to Emily, right, on the investment income side. So we can see here, for example, the interest income column, interest on the bank account is just paid out at the end of each month. So she's recorded how much was paid and deposited into her account at each month. And then the same thing goes for the dividends. And then she's marked on what date she sold those stocks and what amount of capital gain was realized. And then we've highlighted here, April 1st is the day that she left New York and moved to Florida. So that's the change of her residency. Now, this is important because for New York part-year resident returns, you have to specifically track when those income amounts were paid while you were a resident and during your non-residency period. So the totals here, we can see that the interest income for New York residency, $74 was paid while she was a resident, and one dividend payment, $237, was paid out while she was a New York resident. Everything else is attributed to her Florida residency. All right. Now, just some notes to keep in mind. When we talk about accrual versus cash method, individual taxpayers generally use the cash basis method, right? But when you have part-year returns like this, the accrual method is applied in some circumstances. And so a good example that's included in the form instructions, that's the IT-203 form instructions. We have example 3, highlights an issue here where you have dividend payment dates, right? So let's say, for example, you move from New Jersey to New York State on May 10th, and we own some stock in this corporation, which on May 1st, so this is when we're still living in New Jersey, on May 1st, it declares a $1,000 dividend, but it's not going to be paid until June, And at that point, we're living in New York. Well, how do you report this? And under this scenario, you would report the $1,000 as non-resident period income, meaning it's being attributed to New Jersey. And that's because it was declared on May 1st before you moved to New York. So even though it was deposited into your account on June 1st when you were in New York, this would still be attributed to New Jersey. All right. Now, also, the day count is important, right? If a person spends more than 184 days per year in New York State, it's kind of a rebuttable presumption that you're going to be a full year resident. So it's important to, not just be able to identify, okay, I was a resident in more than one state during the year, but count how many days you were in each state, because you could trip over these kind of rules where, well, even if you left New York and moved to Florida, if you were in New York for more than 184 days during the year, you're probably still a New York resident. All right. Now, a lot of this is facts and circumstances test. There's no hardline rules, but that is kind of the starting point for determining whether or not you're a New York resident. All right. So let's have a look at the return, and then we can start looking at some of these numbers here. So we'll start with the 1040 itself, just so we can get a grasp on the totals, the total numbers that are reported. Because remember, for federal income tax purposes, it doesn't matter what state you're living in. You report the total amount of income regardless of the source. So line 1A, we've got our total wages, right? So that's the W-2 wages from both jobs. We've got the total amount of interest, the total amount of dividend income, and then the capital gains, those long-term capital gains on those stock sales. Now, once the 1040 is completed, then you can move into the New York return and start to figure out, okay, well, what portion of that total is attributed to New York State? All right, so we've got the IT-203 here. The first section, we want to complete information on the taxpayer. So you would put first name, middle initial, last name, the date of birth of the taxpayer, and then the mailing address should be your current mailing address. So Emily's put down her address here in Orlando, Florida. And then for these part year New York returns, the instructions ask that in the taxpayer's permanent home address, if we're a part year resident, so we left New York, you would list the address, the last address that you did have in New York, even though you don't live there anymore. So the labeling permanent home address can be a bit misleading. That's why we have to look at the instructions to see what they want us to do, and that's what they want us to do in this circumstance. So Emily would list her New York address immediately before she left for Florida, and that's this address in Albany. And the same goes for the county and school district. So again, she's certainly not living there. This is not going to be a contact address for her, but on the part year resident return when you leave, they do want to know your last known address. Filing status here, single filing status, same as federal. These three questions are answered no, right? She's not itemizing deductions. She's not being claimed as a dependent, and she had no foreign bank accounts. Now, D2 and E, she was neither a Yonkers part year resident or New York City, right? She lived in Albany, so none of those apply. She is a New York State part year resident, and so we have to enter the date that she moved out of the state, which is April 1st, 2022. And then on the last day of the tax year, so December 31st, 2022, she is number 3 here, lived outside New York State and received no income from New York sources during that non-resident period. In other words, while she's living in Florida, she is no longer receiving any kind of income that would be considered sourced to New York State. So this would be different if, let's say, Emily owned a rental property in New York and she moved. She might be the number 2 here, right? So she lived outside New York State, but she's still getting that New York source rental income, and that would require her to still file this form, but she would have some New York State source income earned during that non-resident period. Question H, we did maintain a residence, a living quarters during 2022, so we've checked yes, and we are going to complete the IT-203B form. Now, page 2, where we start to get into some of the numbers. So on the left-hand side here, we have the federal return column. So these amounts line up with what we see on our Form 1040, right? The total wages, the investment income. our federal AGI of 151,106. And then on the right-hand side is where we report that New York State amount. So this is amounts from New York sources, whether you're a resident or a non-resident. And then this also includes amounts allocated to your New York residency period. So before going into this, the best thing to do is the New York allocation worksheet. So this is a part-year resident income allocation worksheet. It can be found in the form instructions. And so the way this worksheet works is on the left-hand side here, column A, we have all the income as reported on the federal return from all sources, right? And then the other columns, we separated between, well, what is going to be New York State income because you were a resident there, and then what is going to be income during your New York State non-resident period. So this is going to be income allocated to you while you're a non-resident, income allocated to you while you are a resident, and then in column C has that income from New York sources while you're living outside the state. And again, in this case, Emily doesn't have any of those items, right? An example would be if you had a New York State rental property, or if you had a partnership or an S corporation investment in a New York entity that had New York source income, you might have something here. But in Emily's case, she doesn't. So the New York State resident period, right, there's the $30,000 in wages she was paid while she worked at a company in Albany. And then there's the allocation of the investment income. So if we have a quick look back at this table, we can see that the amount of interest and dividends allocated to her while she was a New York resident, $74.237. And so that's why we've reported 74 and 237 on lines 2 and 3. And then all of the remainder is allocated to her New York State non-residency period and its non-New York source. Okay, that's column B. So the total in column E, this is what's going to be reported as that New York source allocable income. So if we go back to the New York State amount, there we can see the amounts flowing through from the worksheet. So her total New York AGI here is $30,311. All right. Now, moving on to page 3, Emily is entitled to the standard deduction. So she's claiming her standard deduction of $8,000, which leaves her New York taxable income of $143,106. Now, the $143,106, this is not the total amount of New York source taxable income. Right? This is the amount of taxable income calculated effectively as if you were a New York resident. And this is because the way that New York wants you to calculate the tax is calculate the base tax rate on the total amount of income, and then you apportion that depending on how much actual New York State amounts you have. So we'll get down to that on line 45. But if we start here with line 38, the 8874, we'll have to do the calculation using the tax tables there. So if we go to the New York State instructions here, if we jump down to where the tax tables are, this is our starting point for computing the 2022 New York State tax. So this bottom line applies to us, right? If our New York AGI is more than $107,650, we start with the New York State tax computation worksheet. So if we scroll on down to the New York State tax computation worksheets, the one that's applying to us here, we're in the single filing category, tax computation worksheet 7, right? So our New York AGI is more than 107 but less than 25 million, and taxable income is under 215,400, right? So this is the worksheet we need. Now you can see I've already pre-populated this to make it go a little faster here. But we're starting with our New York AGI, our New York taxable income. Line 3, multiply the New York taxable income by 6.25%. So we've got that amount there. Then on line 4, we have to scroll back up to the New York State tax rate schedules, right? So our line 2 amount, 143,106, we want to go back up to the schedule here. So single filing status schedule. And so that 143,106 in taxable income puts us in this range here, right? The 80 to 215. So the tax we need to calculate is 4504 plus 6.25 of the excess over 80,650. So that's what I've done here with this tape, right? The excess is 62,456. We multiply that by 6.25%. We take our 3903 and a half plus the 4504 per this table, and the total tax calculated per this schedule is 8,407, rounding up to 408. So jumping back to worksheet 7, we put our 8,408 here, and then just continue on with the worksheet doing the math. Subtract 4 from 3, we get 536. Enter the excess of line 1 over 107,650. So there's that 43,456 number. Line 7, we want to divide line 6 by 50,000. Round to 4 decimal places. So our 0.8691 times line 5, right? So 536 times 0.8691 gives us 466. And then lastly, the very last step on line 9 here, it wants us to add lines 4 and 8. So we take line 4, add line 8, and we get 8,874. So that is why the 8,874 is being reported here as the New York State tax amount. So this is our base tax, right? So kind of think of it in terms of, well, this would be the tax owed if I was just a full year resident in New York. So now the next step is to apportion that to the actual amount of New York State source income that we have here. So on line 45, we've got our New York AGI, 30,311, right? That's coming from up here on line 31. Divided by the total, 151,106, gives us 0.2006. So effectively, 20% roughly of our income is being apportioned to New York State. Okay, so then the 0.2006 times the 8874 gives us our total New York State taxes of 1,780. Now, we don't have any New York City or Yonkers taxes. She doesn't have any other credits that will apply. So the only thing we need to account for now that's remaining is the New York State taxes withheld on that first job. So remember, the $30,000 in wages she had, they withheld $2,000, right? All that information is going to be on your W-2, so you would check there. But she's reported the total New York State taxes withheld of $2,000. So the total tax that she's liable for, $1,780. $2,000 of withholding means she was over withheld or overpaid by $220. So $220 is going to be Emily's New York State tax refund check for this year. All right. Now, the last thing that she needed to do was that IT-203B worksheet. So this was required because she did maintain living quarters during the year. So in Schedule B, mark an X in this box if your living quarters were maintained for the entire year. And the answer is no, right? We didn't have it for the whole year. We had it for just part of the year. So if we maintain living quarters during any part of the year, give the address below. So this was her address in Albany, New York. And then lastly here, it asks us to enter the number of days we were in New York State during the year, and that was 89. So at the start of the year, leading up to April 1 when she left, 89 total days. So now, again, they asked that because of that 184-day mark, right? If you find that you're in New York for too many days, then it could bump you into that New York residency period, even if you don't live in the state anymore. All right. Now, another common thing that has to happen, it didn't apply in these circumstances, but Schedule A. So Schedule A is required if you need to allocate wages from a job between one or more states. I guess it would be two or more states, right? So if, for example, you lived in Florida at the start of the year, you had a job there, and then you moved to New York and you kept working remotely for that same job, you would get one W-2 from that Florida job, and you would have to allocate your wages across Florida and New York, right? So that would be the purpose of this schedule. In Emily's case, she didn't need it because she had a clean break between the employers, right? That first job she had, she was living in New York. It was a New York company. And then as soon as she left that company. She started a new job in Florida. She wasn't traveling back to New York at all for work. So this Schedule A allocation was not required given her circumstances. All right, so that covers it for this video. I hope that was helpful. If you have any questions, leave me a comment below. And as always, I look forward to seeing you on the next one. Thanks.